Welcome. I am Eric with Muathe.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. Today being a Monday, an options expiration week, November 8th, 2021. I want to take a look at Tesla, which is gapping down this morning. And so let's do it. Now I'm going to keep this video a little bit on the brief side because I have to get to the business of finding breakout as the market just opened about 15 minutes ago. Now, we all know that Tesla has had an amazing run since late 2019. An amazing run. So we all know that. Now, luckily for my paid clients, we've been all over this name over the last, let's call it 1 or 2 years as it has been breaking out. And you can see, I've talked about this in other videos, but just so that we can understand what we are talking about here is for paid clients, this has been a stock that has been mentioned multiple times since recently, going back to April. We can see that breakout right. So we can say April 16th, 2020. Classic entry at that time. I'll show that in a second. And the most recent one. So let's just do the most recent one here, September 27th of this year. So an email alert was sent to paid clients. And so the breakouts that clients had an opportunity of owning was the April breakout, as just mentioned. Perfect entry based on my concept, and this concept is going to be explained in the description of the video via some links, free information for your consideration. And then of course we took advantage of this subsequent breakout in October, November of last year. Now there was a breakout alert that was sent out as a future breakout alert, but it never did trigger. So it never triggered a breakout here in April of this year. But of course, since we were already watching it, another breakout alert was sent out to clients right here. So I'll say not too bad. And if you know the ultimate Muathe breakouts, all of these were easy to identify. Now I say easy in the context that they met the minimum requirements. Remember, not all breakouts work, but in this case, the stocks met the minimum requirements. For example, so I can keep this as a good example of what to be on the lookout for. So let's take a look at the most recent breakout alert that was sent to clients. This was in September, of course, and you can see where your RSI is trading in September. Here, above 69.1. Take a look at your MACD. Remember, we use 2 MACD settings. So I use 2 MACD settings, and for some reason they work magic, or they work like magic. So one is that setting, the other one is 13, 21, 8. Again, these are MACD settings. And if you notice, all of this number are part of the Fibonacci golden ratio series. So that's why I use these numbers, because what I'm doing by capturing these numbers and using these numbers is seeing whether we can capture the natural ebb and flow of an instrument. At any rate, let's go back to the discussion here. We can see MACD at all-time highs. We need this to be at three-year highs at the minimum. So again, for the MACD, 3-year highs at the minimum. RSI, 3-year highs or above 69.1. Again, this is going to be explained via the links in the description of this video. I have a ton of videos, maybe hundreds of free videos explaining this concept, which I call the ultimate Muathe breakout. For those of you who are new, if you've been with me for a while, then you know the concept very well. All right, now that we've talked about the entry points, I want to discuss something here. Now, of course, Remember, whenever you see an instrument recapture the 69.1 threshold, that in itself can also be used as a buy. So this is the power that I explain all the time. We have to respect this 69.1 power. Again, this goes back to the golden ratio. That's where I get this number from. So again, this captures some natural magic in instruments whenever they move above this threshold. So the monthly has been powerful, so we shouldn't be too surprised to see that the RSI being that powerful has led to this explosive run in Tesla. By the way, this is the monthly chart going back about 5 years. Monthly chart going back about 5 years. If we take a look at the weekly, we can see again we had an explosive run in Tesla. Why? Because the weekly also jumped above that magic number. And in fact, if we take a look at this weekly chart, take a look at these periods when the RSI is back above 69.1. When the RSI is back above 69.1, you get this magic explosive runs. Now, isn't that by itself worth a ton in understanding where we have what I call wonder working power? Now, you have to understand, let me put something in context here. I've been using this power of 69.1 for 20 years and nothing has changed. It actually amazes me. Now, back in the day, in the early 2000s, I used to think it was 68 until I finally figured out that the actual number was 69.1. Now, a little bit digressing. Actually, I wasn't supposed to be talking about this, but let's go with it. So, 69.1. A couple of ways of getting at it. Now, we can do a couple of things. This is, of course, the calculator here. We are gonna, let's use it. So let's go 50. Let's go 50. Let me clear that. Let's go 50 times 0.382. So we get 19.1 plus 50 there. You get 69.1. All right, let's clear that. Let's go 50 again times 0.618. We get 30.9. Now let's do 100 minus 30.9. We get, no, excuse me. All right, I just clicked on the wrong thing there, but let's do it again. So 50 times 0.618. Again, we're playing with the golden ratio number here. So we get 30.9. So what we're going to do here is we're going to add. So 30.9, 100 minus 30.9, we get 69.1. So you can see how 69.1 is part of the golden mean, the golden ratio number, or let's say a variation of it. Now you might have wondered where I got that 50 when I was multiplying it. The value between 50 and 100. That's where I get 50, of course, between 50 and 100. But that's a subject for another day. I believe I'm going to have a link in the description explaining where I get this number. And also the other number, 30.9, of course. All right, let's go back to the discussion here. So let's take a look at the daily now, before I get to exactly what I'm talking about here. And you can see the daily, again, an explosive run of since middle of October. Explosive. Very desirable. Yum, yum, yum. Everybody wants this. Yum, yum, yum. All right. So now the question becomes, where does it go next? Now I want to show you, if you are timing this on a smaller time frame, what I'm going to do here. This is now the 4 hourly. So again, this is a 4 hourly going back about 6 months. 4 hourly. For every line you see here, each of these lines, all of them, is 4 hourly data. All right, so what I'm going to do is zoom in, get a closer look at this. And now we have 3 months, 4 hourly. But let me just go closer. So I want to explain this a little bit better. Let's try 2 months. All right, 2 months will do it. Now, all of this talk until now, 10 minutes into the video. Wow. 10 minutes into the video, here's what I wanted to discuss from the beginning. It's what I call the 2 wrongs or the 2 red flags setup. Links are going to be in the description again for your consideration. Now, to understand this concept, and I'm just going to save us time, is we see here on the 4 hourly, there was a breakout that took place. So that breakout was successful there for a while. This was end of last week. Remember, today is a Monday. We just opened about 30 minutes ago. But we can see with today's gap down, this breakout has now failed. So now we can say, okay, that's our first indication of a red flag. Now the other indication is still playing out, because this is still playing out. It's fresh, but there's a close. Let's just take the lows right there. In other words, we formed a base. I want to be clear here. We formed a base here. This is the base before the breakout, before this breakout right there. So using this concept, and again, I'm going to have links in the description explaining this in a ton of detail, lots of examples. But if we take the lows of the base right there, and the actual low of that base happens to be at 1146, which is, there's a low right there, intraday low right there. So if we observe that Tesla breaks this price level, we can even say if it ends up breaking the lows of the day. Today lows are at 1133. If it breaks either of these two and stays below them, and also if the 4 hourly drops below 69.1, all of that could suggest or could imply that this stock is now due for a massive reversal. So a break below the base is going to constitute the second red flag, which would be confirmation of a signal to get out. So the entire video from about the 10-minute mark was to discuss this concept. Links are going to be in the description for your consideration. Again, all the information is for free, so check them out if you want to. And now I want to end the video with a good note to understand and appreciate RSI 69.1 even on the 4 hourly. Remember, we entered the 69.1 threshold here at about 825, and we are still above it, even as it went as high as 1225 plus. All of this happened with the RSI on the 4 hourly above 69.1. And again, for those who are looking for a sell signal is going to be confirmed should we break below this base. Right now it is above the base, back above the base, so it's doing its best to recover. But from a selling strategy, a violation and a break below the base, which we identified as 1146-ish, if not exactly that, or the lows of the session, anything below the lows of the session is going to be a sell signal. This stock is going to be due for a massive plunge. Why? Because after a hyperbolic move, irrespective of what the story is, when it finally decides, okay, time for a break, be on the lookout for a 50% correction, maybe even a 61.8 correction off the highs. And this is the dark side of a hyperbolic move. At some point, this downside action is going to take place, and it's going to be very aggressively moving. And the whole point of this video is to show you how the 2 wrongs can help you get out of very successful, explosive trades. Links are going to be in the description. On the way up, all you have to do is understand the timing methods, which we were lucky enough to have been aware of, hence the breakout alerts sent to clients. And when an instrument is primed for lower price action, in other words, when this run eventually comes to a stop and a reversal lower begins, then at that point, we know what to look for, which is the two wrongs method, among many others. Thank you for your viewership. I am Eric with Muathe.com, and I leave you as I found you, in the love and in the light of the one infinite Creator. Go forth, rejoicing in the power and in the peace of the one Creator. Adonai. Adonai.